Bitcoin showed us that we could have money that was always on. This idea that banks have holidays, off switches, weekends, working hours, that's a 100-year-old concept that needs to go away. I predict, and I've been saying this for 5 years, that by 2050, the top 10 banks in the world will all be processing loans using DeFi, domestic payments, using crypto smart contract rails. All of them. They won't be called DeFi, they won't be called crypto, they won't be called Coinbase. They're just going to be the next generation of banks.
I can already hear my friends, my bankers' friends, telling me or asking me, well, this sounds kind of scary as well. As you said, everything is 24/7, always on, Does that mean that I will have to work on weekends again?
Well, the average retail banker is...
Bill Barhydt, co-founder and CEO of Abra, is a visionary entrepreneur revolutionizing finance with a cutting-edge digital cash platform powered by Bitcoin.
From the CIA and NASA to Goldman Sachs, Bill's trailblazing career has redefined tech and finance, earning him recognition as a World Economic Forum technology pioneer.
That's why wealthy families love storing wealth in art. Bitcoin is the same, right? Like you said, you can't print more of it. It's just like the Renoir painting. The last thing you want to do with intergenerational wealth is...
Hello, everyone. Great to be back on the show. And this time I have a really cool guest. It's Bill from Abra. Really nice to have you on the podcast, on the show.
Great.
Thanks, Bill, for coming on.
Thanks for having me.
Great. Yeah, that's cool. Well, I've been following you for quite some time. As I always say, a lot of the guests that I try to bring on, it's just people that I've been following, and that over the years, I kind of have my questions that I would like to ask. So it's the same with you. So maybe first up, before we get into the questions, I would like to ask you, you are CEO of Abra, as far as I understand still. Can you maybe introduce yourself and then also say a few words about Abra? That would be great.
Sure, yeah. So Bill Barhydt, I am the founder and CEO at Abra. I'm a longtime kind of tech nerd entrepreneur. I've been in Silicon Valley here for 30 years. Worked on the pre-commercial internet, meaning before the web, and then was at Netscape in the early days, where we created a lot of the infrastructure for the commercial internet, and did a lot of work in mobile payments, mobile banking, developing markets around the world, and got the crypto bug as a result of a lot of the global development work that I've done about 10 years ago. Very, very early. Actually, probably more like 11 or 12 now. Geez, it's been a while. But yeah, read the Bitcoin white paper very, very early after it was released, and kind of just got the bug, because I'm probably unique in that I really understand cryptographic technologies, but I also have a very strong financial services background. So I understand the intersection of the two worlds. And so Bitcoin really caught my eye very early, and then later Ethereum and smart contracts. And it's all just been a big blur and a dream for me to be able to get to work in this space. And then I started a company called Abra. Abra provides wealth management services and crypto banking services to high net worth clients around the world to help them get exposure to crypto. Now they're able to borrow against crypto assets. They're able to stake and earn yield on crypto, Bitcoin, Ethereum, Solana, even US dollar stablecoins now we pay yield on for clients. So we help a lot of wealth advisors as well, who then help their clients get into the crypto space.
Yeah. Okay. I see. Very interesting. And thanks for the introduction. And two quick things that stood out to me is the thing that you said with a financial background, as well as technology wise, that you understand things. That's definitely helpful, because that's something I would argue that's what I'm missing sometimes, really having this tech background as well, because that helps you to really set things into context as well and kind of understand it more deeply. So that's certainly a nice skill to have. And maybe the other thing that I just out of curiosity wanted to ask, you mentioned the internet pre-commercial era. So what was the internet like back then? It was probably not as exciting as today, right?
No, it was a big research network. I was at... Okay, so the way the internet used to work is it used to have these big peering points, and they were all directly connected to each other. Like if you look at a map of the US, for example, you'd see a very small number of dots with big, thick lines connecting those dots. And those dots representing places like where I worked at NASA in California, or Stanford, or San Diego, or DARPA in DC, which is the Defense Department's research agency. And they were all connected. And that was the early internet. And those big dots on that map were what we call peering points. And those peering points allowed other universities and schools to connect to the internet, right, in the early days. And we ran the peering points for the West Coast. And you could literally add computers to the internet by just going into an office and logging into a computer and typing in a bunch of code. And all of a sudden, you owned a domain on the internet. And I registered a bunch of domains that way myself. And you could edit. It's all nerd stuff, but you could edit routing tables and other things that you couldn't do today. So anyway, it was the Wild West, and we were figuring it out as we go. But there wasn't really a promise of a commercial internet. It was really meant for research, and we thought maybe there would be another version of it that eventually was commercialized, and then the web came along, and all of a sudden there was the commercial internet.
Yeah, and the rest is sort of history, but really interesting. It's just like interesting because nowadays I feel like in digital assets and crypto and blockchains, we have like some similar developments, in terms of like I've been Nostr pilled a few weeks back, I don't know if probably you're familiar with Nostr as well, obviously, and I've been on Nostr for these past few weeks, and there it also kind of feels very early. I can register my real name and stuff because where can I do this on the internet? Like I'm with all the other stuff, I was so late, and now it feels like really early stage again. And so you have a bunch of these blockchain based things, and then you have Nostrs, and it just feels like probably similar to back then, I would argue.
Yeah, look, I mean, the early internet, and this is very ironic, right? Because there's think of it as the technology as a pendulum that's kind of swinging, right? And the internet was meant to be a big decentralized system that had no off switch. The original idea was if we have a nuclear attack, we need a network that is guaranteed to survive because there's no off switch. Okay. So it was very decentralized. And as we added more of those big dots to the map that I mentioned, the network became more decentralized. The web in its earliest incarnation was highly decentralized. There was web servers all over the place. Now, or I would say in the smartphone revolution, particularly with social media, we regressed to the point where the internet has become highly centralized. Meta owns a big chunk of Facebook, Instagram, et cetera, et cetera. Apple controls on and off ramps. Google controls on and off ramps. Highly centralized internet. You're talking about Nostr, and I do a lot of work in Bitcoin, Ethereum, Solana. These are all highly decentralized systems that are now helping the pendulum swing back to the early days of the internet, where it was meant to be decentralized, no central ownership, power to the people, as they say, right? And I think this is wonderful, especially when you see what's been happening now that the truth has come out about interference on, the previous owners of Twitter being forced to censor users and change tweets and unplatform presidents and all this kind of stuff that, we didn't know that the government was kind of pulling the puppet strings in the background. But now we have this decentralized movement started with Bitcoin as money and payments. But now, to your point about Nostr, it's moved to social media, which I think is fantastic. That was the purpose of the original internet.
Yeah, exactly. As you said, it's really a movement, and that's what I really much like about this. It's not just a technology, it's not just money, it's a lot more. It's a movement. To some, it's even a religion, but it's just like it feels so great because the purposes are aligned, and that's what I like about it.
Yeah, I would say, well, one point I would make is, to me, decentralization equals freedom. That's, if there was one point that I would get across to people who are trying to understand what you call a movement, that simple equation would be it.
Nice. Yeah, that's certainly a sentence people can probably, kind of, what's the word?
Phrase.
Ponder on, that's, yeah. Exactly. Yeah, exactly. Or meditate on even like, yeah, decentralization equals freedom. Well, nice. But maybe if I set the context for today's discussion, because I wanted to talk to you about like the future of Bitcoin banking, because I think with Abra, you are at the intersection of this, at the forefront. And so, yeah, in terms of context, I mean, Bitcoin, we see a lot of banks, or at least like where I'm from, also in Switzerland, more and more banks are increasingly moving into the Bitcoin space and digital asset space, and it started with custody and then like trading, asset management services. But now we're at a point where at least I have the feeling if I talk to other people at like Bitcoin pro banks, they're starting to ask the question, what's next? What other Bitcoin and digital asset services are there? And so that would be the question I would like to ask you. What services are there for bankers to integrate with?
Yeah, it's a great question because I think about, uh, Ethereum, Solana, these kind of next generation platforms as the future of banking. Bitcoin showed us that we could have money that was always on, right? Today is Thanksgiving. We're recording this on a Thursday in the US. It's a holiday. You can't initiate a bank wire in the United States on Thanksgiving, which is insane in this day and age of everything being always on. But if you want to send Bitcoin to somebody else, nobody can stop you on any day, 24/7, 365, right? As we say. So this idea that banks have holidays, off switches, weekends, working hours, that's 100-year-old concept that needs to go away. And so the next generation of banking services, lending, payments, money transfer, are all going to be based upon crypto rails in the background. And you as a consumer will just call it banking. You won't call it crypto, right? You don't think about, oh, I'm using an IBM mainframe to process this bank wire. You are, but you don't think about it. It's just a bank wire. It sucks. It never works well. I've never met a person who said, oh, this bank wire was an amazingly pleasurable experience. Have you ever heard anybody say that? Right?
No, not really.
The difference is when they send money with stablecoins, right? And to another wallet, and you don't know what wallet service they're using, right? It just works. It's like, I didn't have to know anything about this person in Switzerland sending them stablecoins from the United States. It's a miracle, right? And so that's how banks are going to work in the future. If you're developing what we call a neobank today, like these new bank services that have cool mobile experiences and whatnot, you're not going to use old stodgy banking systems for that. You're going to use Solana, Aptos, Sui, these next generation smart contract platforms that can process thousands of transactions a second, just like Visa, that costs nothing to use, support stable coins like, dollars, euros, Swiss francs, whatever, allow you to earn yield on your stable coins, allow you to borrow in fiat or, traditional currency using your Bitcoin or even your house in the future, your tokenized real estate as collateral to borrow. And this is something that I'm spending probably the most of my time on, is lending in the crypto world, because as the price of Bitcoin is going up, people don't want to sell it, right? But then access the gains. How do you do that? You borrow against it using what we call DeFi, or decentralized finance, which is based upon crypto. But again, all of these capabilities that I'm mentioning are not going to be, requiring a PhD in computer science to use. It's just going to be how banks work. Now, Abra is one of the earliest players in making these services available to retail investors, but it's going to be all banks in the future. I predict, and I've been saying this for 5 years, right, that by 2050, the top 10 banks in the world will all be processing loans using DeFi. Will all be processing international and domestic payments using crypto smart contract rails. All of them. They won't be called DeFi. They won't be called crypto. They won't be called Coinbase. They're just going to be the next generation of banks. And they probably, many of them, just like Netflix in the US, replaced Blockbuster in the US. And, people under 30 don't know who Blockbuster is anymore, right? But there's going to be a cadre of companies that are created from scratch that bypass the old world order because they can't change and move fast enough, right? Because CEO Chase, one of the largest banks in the world, is saying that, crypto is rat poison. Well, that's not productive when this is the future.
Yeah, exactly. Yeah, so interesting. Well, I mean, yeah, exactly. You still have the naysayers, the critics, and I mean, I can already hear my friends, my banker's friend, or my banker friends, telling me like or asking me, well, this sounds kind of scary as well, like as you said, everything is like 24/7, always on. Does that mean that I will have to work on weekends again, or what's happening here? And what will it mean for bankers, for my job? If like we can already have this example, if we have Uniswap, that you mentioned, like DeFi, this is this decentralized exchange, and it does so much volume, to the point where it's almost equal to something like Coinbase.
Right.
But in terms of like employees, it's a lot less, and it's this Facebook, Uber phenomenon that we've seen. Like tech is eating the world, and here it's happening again. And so, what does it mean for the average banker? You have any insights there?
Well, the average retail banker is going away, and that has nothing to do with crypto. That's more of an AI-driven phenomenon, right? So if you think about all right, let's take a step back. So on the one hand, we have AI, which is about to replace everything, right? Knowledge workers, computer programmers, AI itself is being reprogrammed by AI now because they can basically test and automate within places like OpenAI faster than coders can. So I think we're one generation away from the majority of code being written by AI. That's not true today. Even in Abra, we use AI tools. Everybody does for programming, but it's people that are bringing it all together, design, architecture. We're one generation away from having more AI do that work than people. That's going to be true within banks as well. Retail, support, half of chatbots are AI driven now, right? That's going to be 99%, and you won't be able to tell the difference. I mean, I have discussions on a whimsical with ChatGPT, the new version, all the time. I tell it, okay, you're going to be my therapist for the day, and we're going to talk about, my girlfriend or, whatever, right? So, and it's fascinating that you can have an intelligent discussion. Now, that's going to apply to every business, and why should banking be spared? So it's all going to be automated via AI. But now let's come over here and let's bring in the crypto discussion, right? Two big things are going to happen. First is all those banking services that I mentioned before that are going to be replaced by crypto and smart contracts are going to be integrated with AI. So they're going to be all always on 24/7. They're just going to work. There's not going to be an off hour. Bank wires settle in real time. There are no bank wires. It's just going to be stablecoins anyway. Loans processed in real time. And it doesn't matter what country you're in. All this AML nonsense is going away. You can't stop it. It's wasted trillions of dollars, and it has saved no lives. Okay, so that's going away. All right. Second, think about what we call these smart bots or agents. There's this big kind of push and movement in the AI world where I spend a lot of time. It's called this agentic internet. What is the agentic internet? It's a very fancy term for saying computer programs that are AI that basically run automatically out on the internet, right? And they do anything you want. For a consumer, they might provide a service to rent a car for you, book a flight for you, help you with processing a prescription for your drugs. For a company, it might be, ordering items in a supply chain. But they're just floating around the internet, and some of them take payments, right? Because they have to make. Now, if it's an automated agent out on the internet, it can't have a bank account because a lot of times it's not owned by anyone. It might be a DAO, a decentralized autonomous organization that basically just uses some type of stablecoin or cryptocurrency to process payments. Well, you can't give a bank account to an autonomous agent because then it's not autonomous anymore, right? So now these things have to use smart contracts to process payments and maintain the level of automation and autonomy that they need to be autonomous agents in the first place. I predict that model is going to process trillions of dollars in payments within 20 years. Trillions. Okay? Which is dwarf in many cases countries' own banking systems. Right? So now you have always on retail commercial banking, and you have always on AI-based banking for autonomous agents, all based on crypto rails. So long-winded way back to your question of saying the entire concept of banking is about to be flipped on its head in a way where all of those jobs that you talked about aren't going to matter anyway. Now, they're going to be replaced, and I think we're going to have an economic boom globally. So it's not like, all of a sudden it's going to be a depression. There is going to be a transition. The transition to the Industrial Revolution was painful. The transition to the knowledge worker revolution was painful. I think the transition to the decentralized AI-based internet is going to be painful. But each one has led to significant increases in global GDP, significant reductions in global poverty, right? And increases in global employment. It's always happened. It always will, in my opinion.
Yeah, exactly. I mean, if history is any sort of rhyme, and if it's gonna rhyme, then obviously, as you said, this is gonna play out like this again. But still, I mean, what would you say is then a human being's role in all of this? If it's like AI, crypto driven sort of, what could be the role if you now kind of try to fantasize about this?
Yeah, my middle son is studying philosophy at Berkeley. It's a logic program. It's unbelievably complicated, right? And his brain is next level. And so I think that people who can design those type of agents, who can give them direction, who can basically provide ethical standards, who can understand the requirements for vertical industries. How does banking talk to automotive, talk to healthcare, talk to educational services? And, you need experts in those fields to basically give the AIs guidance. Scientists who are going to basically say, okay, we're going to design drugs and other, solutions to world problems via AI, but the AIs can't yet reason. They will be able to eventually, but we need to basically interact with them. And, I think it's going to basically create a baseline educational requirement, not just for computer programmers, which I think that peaked probably in the last 5 years, and it's still going to be there. But computer programmers, I think, are going to be really at the high end, meaning we have armies of kind of okay programmers on the planet now. Those people, those jobs are going to go away, right? So the high end of programming, the high end of doctors and nursing, the super experts are going to be in demand. And then I think there's going to be, a ton of people who are going to be training robots, right? Factory, So I think the economy is going to morph into this symbiotic relationship between decentralized systems, robotic systems, AI-driven systems, human beings, et cetera, et cetera. GDP growth, the biggest risk to everything I'm saying, in my opinion, and it's counterintuitive, is the falling population, right? Meaning the population is increasing because of Africa and Asia, right? It's about to peak given current trends and start declining in the next 100 years. If not, well, actually probably sooner. That is the biggest risk to everything I'm talking about, is we won't have enough people. Robots solve that problem, right? The rate at which training robots, U.S. factories, there was I read an article yesterday about what BMW is doing, where they have these kind of humanoid robots that are 4x more productive than people, which ultimately, creates, huge productivity gains for BMW. So I think that this kind of boom is coming, and people are going to have to make that transition in different ways for different industries. And there's going to be all kinds of self-serving entrepreneurs who just, are providing services to these AI bots all over the internet. For example, instead of social media influencers, right? I'm almost like an AI influencer. Like, I help direct bots to do different things. So, again, we've figured it out every generation, and we will figure it out this generation, but in a way that's even bigger than what we had in the past.
Mm-hmm. Yeah, it's going to be so interesting, as you say. I mean, and I also kind of have the feeling that there's going to be, obviously these super coders, they will be in high demand, but then again, we will figure it out somehow, that maybe these people, who are bankers today, they will kind of turn into some type of mediator, you can kind of mediate between the client and some type of AI, and then it's sort of like a financial amigo, which is giving support. I mean, I had an interview earlier, which I was talking to somebody in which I was talking to somebody who's like helping with custody on Bitcoin, and what they're actually doing is really just offering support, because these things have become quite complex. If you do like multi-signature with collaborative custody, everything. And so people could actually do this by themselves. It's all open source and it's doable, but most people wouldn't, because they just want to have some sort of support. And there again, maybe still until we hit like singularity, I think there's definitely some stuff for people to do, and that's what I find so interesting.
And that's the part where it's, you can ask me all the questions you want about how that's going to play out. But once you reach kind of a technological and economic singularity, and they're kind of the same at that point, we can't know what's going to happen. If you have an intelligence, a collective intelligence, hopefully decentralized, so there's no big central power. But if we have a decentralized kind of collective intelligence that's growing at a rate that's 10x our collective intelligence today in 10 years, which is where this is headed, the problems that are solvable become almost incomprehensible to us, right? And so I think, to me, it sounds more, it's a little scary, sure, even for a technology guy like myself, but it sounds it's almost utopian-like, because disease, famine, traditional money, in theory, that, almost like Star Trek-like, it should all go away. And that's the promise of what we've been building towards as a society for 1,000 years.
Yeah, exactly. Yeah, so interesting. Nice. Well, I mean, I would like to come back to this question about the services, in terms of Bitcoin and other digital assets, and maybe now you beautifully described how the entire system is going to change and what it will look like in the future. But maybe if we zoom back and come to the here and now, you mentioned borrowing against Bitcoin. I think this is on everybody's mind nowadays. I think you are doing it at Abra. Maybe you can have give us a few insights there, and then also kind of like, how can banks integrate with that type of service already today,
Yeah. So a few things. Right. Bitcoin is quickly becoming, socially acceptable as a global reserve currency. And that means, what does global reserve currency mean? It means that I can actually store my wealth in Bitcoin and be relatively certain that it's not going anywhere, that I can store it myself. I can maintain my own keys. I can use a service like Abra that is audited by, a government agency that has to basically maintain my own personal vault. So my funds, my crypto isn't commingled, right? One thing I would say for viewers is, please don't store Bitcoin on an exchange unless you're trading, right? Because you actually are a liability on the exchange's balance sheet, right? In other words, you've given them your Bitcoin. With a service like Abra, you get your own vault. So it's always your Bitcoin, right? And then if you want to borrow against it, which you mentioned, why would you want to do that? Why would you want to borrow against Bitcoin? It's very simple, right? If you sell Bitcoin, obviously, you don't get the benefit of future gains. If you sell it for fiat in many countries, like the US, you have to pay capital gains taxes. In most countries, you have to pay some capital gains tax. Some you don't, right? But you also, again, don't get the benefit of future gains. So by borrowing, right, it's still your Bitcoin. You're simply using it as collateral, like taking out a loan against your home, right? A home equity line of credit, we call it in the US. And you get the benefit of future gains. So we have clients who borrow against their Bitcoin. Let's say they borrow 30% of the value. So it's relatively low percentage of the value, so very low risk in broad terms. They don't even pay back the loan. They just take the interest payment and they roll it over into the principal on the loan. And that, if the price of Bitcoin is going up fast enough, the value that they've borrowed is actually going down, right? In dollar terms.
Yeah,
which is
exactly.
fantastic. And we have many clients that do this. We call it a lifestyle loan, right? So I personally think about, in finance, we call it my beta, right? The beta is like what you should make in the market. My personal beta is Bitcoin. My goal in life is simply to have as much Bitcoin as possible financially and borrow against it, right? Because the Bitcoin is the appreciating asset, the dollar is the depreciating asset. If financially, you want to hold the appreciating asset forever and borrow in the depreciating asset, because your net worth is increasing as you're borrowing.
Yeah, and I feel like more and more people are actually coming around, and are kind of recognizing this. And also now that Bitcoin is almost at 100,000 US dollars, like it's like, yeah, as you said, it's becoming socially acceptable, And then I can almost see a future where you are like saving in Bitcoin, and that's just the new normal, but then spending you will not do in Bitcoin, but will do in stable coins or whatever fiat you have tokenized. So is that something you can see as well?
Absolutely. And that's what we're doing now, right? It's probably our fastest growing service at Abra for consumers, high net worth investors, family offices, is they've all been holding Bitcoin for a while, or some are just now getting on the bus. I also think that the US, unfortunately, polices the global banking system, right? That's unfortunately the way it is, right? Through correspondent banking networks. Many of my US viewers, friends, don't even understand this because they don't have to understand it. But if you live outside the US, you're well aware of what a correspondent bank is, how the US polices the system, AML rules, et cetera, right? In this new kind of world post Biden, I think it's going to become acceptable now for banks to hold Bitcoin, banks to lend against Bitcoin, exactly as Abra does. And our goal at Abra is to provide those services to the banks themselves, to be able to provide it to you and your viewers. That's going to open up the doors for all of the international banks who are afraid to provide this, even though they want to, because they're afraid of the US, right? Again, I don't want that,
Exactly.
but they are. So it's the way it is. And so that's going to open up the proverbial floodgates for all of these global banks to start offering custody for Bitcoin, Ethereum, Solana, whatever, and lending against the value of those crypto assets. I think you're going to see a big boom in this in developing markets. The same way people in Argentina and Africa want to hold dollars instead of the Nigerian naira, which is going to shit quickly, right? They're going to hold dollars, but now Bitcoin, because they're going to see that, okay, the dollar is actually depreciating just like the naira, just not as fast. While Bitcoin is going up, I may as well hold Bitcoin and borrow in dollars, just like wealthy people do. There's no difference.
Yeah.
Right.
Yeah, exactly. In that sense, stablecoins are almost like a gateway drug to Bitcoin, which is then interesting even for these people, But I mean, the point that you just mentioned, because that's a critique that I also then often hear, like it's people are like, well, borrowing against Bitcoin, because you don't want to sell the asset. It sounds just fine, But what has become of the mantra, of Bitcoiners, where they always said like, we want to bank the unbanked? Isn't it the case that like when people can borrow against their assets, it's just going to be the wealthy again who are going to be better off in the end? So I was kind of wondering, where are your thoughts there? And then because I heard you say that Bitcoin has also got great potential to revolutionize the credit system in the global south and other countries. So maybe we can relate these two questions as well.
Yeah. So there's a very important sociological aspect to your question, and unfortunately, there's some technical aspects to your question. So I got into Bitcoin explicitly because of your question, right? I was doing a lot of work in developing markets, global hotspots like Haiti, rural Mexico, rural Philippines, working on remittances, and Bitcoin solved so many problems that we had in the early days. But you could do very small dollar transactions on Bitcoin in the early days because there was no fees in the network. Right now, the fees are very expensive because it's holding $1 trillion plus in value, and it does cost fees that are similar to maybe a little bit less than a bank wire. It might cost like $2 or $3 to move Bitcoin around, but it's not free, right? So if you're in rural Haiti and you're trying to move $10 around, you wouldn't use Bitcoin today to do it, right? Because it would cost you $2 to send 10, right? So, but I think that there are technical solutions to that problem. So I think what's going to happen is you will see people in developing markets holding Bitcoin in offline wallets using kind of what we call layer 2 technologies that allow it to scale, to use small dollar transactions, and then roll up and settle on the Bitcoin network at scale. Meaning there's technologies like Fetterment that people can read about online that basically allow communities to partner so that they're sharing in those fees in a way that, your fee might be a penny versus $2, which now makes the network very viable for small dollar transactions. Because if I'm very poor and I can store $500 in Bitcoin and I can borrow $25 and keep borrowing more as the value increases, I'm now creating familial generational wealth, right? That $500 is just important to me in sub-Saharan Africa as $1 million might be to an upper middle class person in the West, right? So,
Yeah.
there are technological solutions to this. There are challenges. Don't get me wrong. Right now, right, having 100 million people in Bitcoin does mean that it's better suited for kind of the upper middle part of the global income pyramid. That needs to change. The technical community, I think, recognizes that, and over the next few years, it will kind of scale down as it initially scaled up.
Mm. Yeah, exactly. But I think that's the beauty of it, like we've been seeing it in real life play out in the sense of like, yeah, Bitcoin's price is ever increasing, and I mean, I just want to quote Michael Saylor, who said, it's going up, Laura, forever, it's going up. And it probably is because of like its 21 million cap, but then you have like different cycles as we can see, and like the early adopters are scaling out, and taking profits, but new people are coming in, and then probably they will be early compared to 20 years from now. And it's going to be this sort of endless cycle, until maybe at some point there's going to be more of a saturation adoption. But still, I think that's the beautiful thing because of this like hard cap this Bitcoin has,
That's right. There's a lot of important points in what you're saying. So the first is that the government is never going to stop printing more money unless they address the global debt, which right now has reached a tipping point that unless we basically, have a massive scaling back in global government expenditures, there's no end in sight. The U.S. spends $1 trillion a year just in interest payments to service our debt. Our interest payments are now larger than our defense budget, okay? Which may not be sustainable in the long term, but right now it simply means we're printing more money, okay? Let me put it in very simple terms for people who don't study finance. If you have a Renoir painting, right, it has value because people like his art and he's dead, so there's not more Renoirs being created. That's why wealthy families love storing wealth in art. It's not taxed when it gets moved from generation to generation. It retains its value. Its value goes up because the government keeps printing more dollars. The last thing you want to do with intergenerational wealth is store it all in real estate, which is taxed, in money, which loses its value every year, bonds, which are going to shit, and wealthy families who preserve money over 100 years understand this. Okay, Bitcoin is the same, right? Like you said, you can't print more of it. It's just like the Renoir painting. We know exactly how much there's going to be. There's never going to be more. Yet we keep adding more dollars, more francs, more euros, more yen. Every government is doing the same thing. We've basically weaponized and financialized the monetary system in a way where we simply are debasing our currencies. Every government is doing. It's a race to the bottom, right? And so having assets that are guaranteed to appreciate. Now, you talked about the volatility. Let's talk about that, right? When I teach classes on this topic, I talk about exponential growth. I often show a chart of Amazon. Now, if you take a log chart of something which smooths out the noise of an exponentially growing asset over time, the Amazon stock price from 1998 to today looks like this. Literally a straight line up and to the right for 30 years. Now, if you were holding Amazon stock in 2001, it did not feel like a straight line up and to the right? The stock price fell like, 80%, just like Bitcoin. Okay?
Exactly.
That's the peaks and valleys of dealing with an exponentially growing asset, right? In its very early incarnation when it's not worth a lot of money. Now, when you look at the stock price of Amazon, Amazon's a $1 trillion company, right? It's not falling 80%. It's relatively stable, and it's a great store of value relative to the dollar, not relative to Bitcoin, because Amazon can create more shares. They can dilute the existing shareholders, right? Bitcoin can't do that. But still, right, there's a reason why exponentially growing assets have this system. And it all comes down to your time preference, right? Am I willing to hold this for 10 years or even better forever and borrow against it? Or am I a short-term speculator? If you're a short-term speculator for an exponentially growing asset, you're going to be subject to those peaks and valleys while it's going up and to the right on the log chart. If your time preference is forever, those peaks and valleys don't matter.
Exactly. Yeah.
Yeah.
Yeah. No, that's such a great point, and such a great explanation. Obviously, like we deal with an exponential technology here, and every so often they come along, and I think Bitcoin is exactly one of these technologies again. But maybe before we close this off, I would just like come back to this question about the revolutionizing the credit system, because I heard you say that this can really help also in the global south, in terms of like they have like debit-based systems, where they lack the access to credit and stuff. And maybe if you could kind of flesh this out in a little more detail, how exactly can Bitcoin help there? And what does it change, so to say?
Right. Three things. Right. So I lived through the debanking of remittance companies 15 years ago. Right. 15 years ago, under the Obama administration, for some reason, they decided certain industries were bad. The gun industry, the early marijuana industry, even though it was legal, and certain remittance businesses. Right. So if you lived in Somalia, you couldn't receive remittances from the United States for a while because they shut off the correspondent banks to block them from sending those remittances. People died because of that, right? They starved because they couldn't receive those remittances. And we thought they fixed that problem, but guess what happened, right? Under the Biden administration, they started debanking crypto companies. The same exact.
Yeah, exactly.
Right. It was I was working in the remittance business, so I lived through. We called it Operation Choke Point 15 years ago, and now we call it Operation Choke Point 2.0 today. And every crypto CEO I know has had their bank account closed in the United States at least once, and many had their personal bank accounts closed. And so you play whack-a-mole by opening up multiple bank accounts, hoping they all won't get closed. That's point number one. Bitcoin solves that problem. Cryptos in general solves that problem. You can store stablecoins. You can store Bitcoin. I know people who send remittances using stablecoins. It's faster. It's cheaper. It's 24/7. The recipient would rather have the stablecoins. So there's a growing public, of remittance recipients in remote villages around the world who have Android smartphones that cost $25 that can easily store stablecoins on a wallet that they can keep off the grid, no KYC, totally legal. No government can stop you from storing information on a smartphone. A private key is just information. It's just a stream of ones and zeros that represent those dollars. That's point number one, right? Point number two is it doesn't care about your politics, right? So all of this idea of sanctions and, it's all going away because it's untenable in a decentralized internet world, right? Now, there are bad people out there. Absolutely. There are bad governments out there. Right. Even by my moral standards, which I'm going to inflict on your viewers for, which I hate doing because it's kind of orthogonal to the ethos of crypto, but they're out there. OK, my guess is the vast majority would agree on that. I don't want anybody else's morality. I wouldn't want to inflict mine on anyone else's, but it's probably true. Right.
Sure.
But if you're moving $50 around, right, in some war zone or $100 around, you're not doing it to finance terrorism. You're doing it to feed your family, right? So why are we worried about, blocking access to getting basic goods and services for $50, $100, $200 to people in these locations who are just trying to survive? It makes no sense, right? So crypto solves that problem and removes this idea of, whose morality wins when it comes to banking and financial services and the global south, et cetera, right? And the last is lending services. Again, most of our loans at Abra, because we're servicing the wealthy, are $500,000 and up against the value of crypto, or certainly $100,000 and up. But again, structurally, there's no difference between a $10 loan backed by Bitcoin and $1 million loan backed by Bitcoin, and there shouldn't be, right? Stablecoin on Solana, those transactions are free now, right? The Solana total value locked in dollars, meaning the amount of stablecoins is ballooning because people can literally move dollars around for free. In the last cycle, when Ethereum spiked, you couldn't move dollars around for free anymore because the Ethereum transaction fees were too high. Well, now 4 years later, Solana has solved that problem, right? So now you have the ability to process loan transactions globally, make loan payments globally for $1 without and pay a penny, if that, to do it, right? So this is, now a whole new ballgame where we don't have all the limitations on the banking system that we had before.
Yeah, exactly. Yeah. I mean, I heard of these solutions, like coming back to this point about collateral, Bitcoin, digital assets. I mean, a solution where you could potentially, as a person in the global south, maybe you don't have banking access, as you said, but now with these protocols that are out there, even these DeFi protocols, and maybe some of them are still like, in the making, but once they're really like bulletproof, then you can go there. And again, you can just kind of use your Bitcoin or whatever asset you have and then borrow against it, and then you could even have some sort of like a debit card, where you get like credited some stable coins and then you can spend it with your debit card right on the spot against the stable coins that you have taken out in a loan. So these kinds of things. And there again, because it's over collateralized and because the Bitcoin is sitting on an address everyone can kind of fact check, then it's obviously, you don't need that well-established credit scoring system maybe anymore and these kind of things. And that, I think that's what's so interesting, right, about that as well.
100%. What you're calling debit card is just a way to access a stored value that the banks have agreed upon. And I think you're going to see all kinds of new ways to access these Bitcoin wallets, stablecoin accounts, whatever you want to call them, including, old legacy debit card networks, but also entirely new solutions that I'm seeing crop up all around, the crypto and banking ecosystem. I think it's a really interesting time for kind of this, global kind of connected banking system. I think we're going to see just like WhatsApp is the standard now for people to, message internationally. I think you're going to see some type of global Venmo emerge, right? In the US, we have Venmo and different countries have different WePay in China, whatever it is. And you're going to see a global Venmo emerge now that's going to get the network effects because it's free and easy to move money around, just like it was free and easy to message people with WhatsApp when text messages cross-border were $1, right? And that's coming because of crypto.
Yeah, exactly. Yeah, it's going to be around the corner, that's for sure. Cool. Well, hey, Bill, thanks a lot for doing this and then answering all the questions in such a excellent way. Maybe just one last thing, like in terms of Abra, like who would you like to connect with? Like, who are you on the outlook for? That would be interesting to know.
Yeah, sure. So if you're holding crypto globally, right, if you're holding Bitcoin, Ethereum, Solana, definitely check out Abra. Abra is the best and safest way to custody crypto. If you're not comfortable using a hardware wallet yourself, you get your own personal vault. You get a named concierge that helps you. So it's not like a black hole, like an exchange. We'll teach you how to easily borrow against your Bitcoin or your Solana or Ethereum holdings, how to earn yield on your dollars, your Bitcoin, how to stake your Ethereum and Solana. Really easy, right? Our goal is to make it super safe, globally compliant, 24/7 easy. And we cater to that kind of, higher net worth audience that is, really concerned about how to do this in that kind of safe, secure, compliant manner.
Great. Cool. That's good to know. Yeah. Well, I mean, maybe just the last question. I almost forgot that because that's the one I ask to everyone that I have on my show. Is there any high signal person that you could recommend that we should bring on the show? Like anybody that springs to mind?
Wow, there's so many. I mean, I follow a bunch of macroeconomists like Raoul Pal. He's amazing. Anthony Pompliano is amazing. I was just catching up with Anthony last week at the Blockchain Summit. They're awesome. I like the intersection of technology and macro trends. And so those are the people that I kind of look to, because I'm always about, the 15-year trend and then making it accessible to people today, right? It's great to know where we're going to be in 20 years, but what's actionable now, and that's how I try to, live live throughout my career. And there's a few people like that, like the names I mentioned, that are trying to help make those things accessible to people like we are today.
Yeah, exactly. Raul or Pomp. Yeah, these would be great. Maybe at some point I can get them on the show. That would be amazing. Well, cool. Hey, Bill, thanks a lot for doing this. And now enjoy Thanksgiving. And hope to see you in real life anytime soon.
Absolutely. Look forward to it. Thanks for having me.
Thanks, man.